Welcome to This Week in Money, the source for market opinions. Here is Jim Goddard.
We're speaking with Pat Power. Pat's a former floor trader from the Vancouver Stock Exchange. He's president and CEO of Arctic Star Exploration Corporation, online at arcticstar.ca. Pat, welcome to This Week in Money.
It's nice to be here. Thank you.
Today we want to talk about the Uptick rule. First of all, maybe explain what is an Uptick rule.
Well, the Uptick rule was designed for the venture markets, smaller markets, to help preserve, against bigger money coming in and manipulating the stock, basically. Venture companies are often, they live and die by doing financings, and the Uptick rule was put in place to if you're going to short a stock, you're going to have to wait till someone takes it on the offer before you can short it. And that made it a little harder for the shorts to get into a small market and do damage as the short would do. And for some reason, they took that rule away a few years back, and it's really made it difficult for junior companies to finance in particular, because they're susceptible to larger groups of money who can come in and knock your stock down when you're trying to do a financing. And that's purely what makes the venture companies tick, is financing. So it's very difficult to survive that switch in the rules. And no one's quite sure why they did it, but that's what a Uptick rule is. It used to be there, but it is gone now.
Do you believe the Uptick rule should be reinstated for the junior markets in Canada?
Well, totally. I'm not sure why it was taken away. It was put in place to help smaller companies who aren't as liquid as bigger TSX senior board companies, who rely strictly on public financing most of the time to survive. And it worked very well for many, many years. And I believe IROC is the one that took that rule and took it away. And upon chatting with them, they said they've done studies that say it doesn't make much difference to junior companies. But anyone in our world would tell you it makes a lot of difference, and it has made a lot of difference since they've taken it away.
With attention being focused on shorters in the junior markets, what kind of damage can shorters do without an Uptick rule in place?
Well, for instance, it's the financing. If a company announces a financing of $5 million at, say, $1, and a group of shorters who have a lot of money behind them come in and short the stock on a downtick, which you can do now, so they can aggressively push a stock's price down. If that stock falls below $1, where the strike price of the financing is, companies have a very difficult time convincing investors that that should be the price they put their money in. And often they create such a panic that a lot of companies can lose financings, period, because of short sellers in the market, which is their goal, is to knock the stock down. I mean, they sell at a certain price, they want to recover the stock and cover the short at a lower price. So I don't see how taking that rule away helps the venture exchange or any company on it. It's a very difficult thing to hold confidence with potential investors and current investors. And that rule used to help a lot. Since it's departed, I know many stories personally of people who have had financings that have had to be repriced, or they've lost them entirely based on lack of confidence from, again, current shareholders and potential shareholders.
What difference would it make if the Uptick rule was still in place?
Well, I think there would be more confidence by those investors, and you have to set a price. And usually how it's done is you set a price and you try to maintain that price so people can look at the stock and say it's well priced for a financing, I'd like to participate. It's much harder for a shorter to push a stock down if they have to be on the offer side of it instead of the bid side. If you can hit the bid over and over and over again, you can theoretically knock a stock wherever you want it, as long as you have the money behind you. And it's the bigger groups of money that turn to our markets and go, well, these guys are all weak. If we can make a lot of money here. So I think the Uptick rule preserves. They can't go into a market and knock it down. They have to be on the offer side, the Uptick side, and that makes it much more difficult for a shorter to get stock to go down, and the confidence can remain with the potential investors for any given financing at a certain price. So I think it's very important that remain, and I don't know why. None of us know why it was taken away, but no one was consulted on it. So we think it's a big negative that it's not there anymore.
Is the average guy able to short the juniors? And what about brokerage houses and their traders?
Well, that's the interesting part. You have to have 200% of the value of your short in a margin short account to do a short. So it's really about how much money you have. If you have a lot of money, you can go short a market. If the average investor doesn't have a lot of money, it's very difficult to short. So it's a game cut out for money in groups of people who have money. So it's not necessarily in the best interest of our markets. It's people looking for potentially weak parties that, once right now you can step up, and if I put $5 million in an account, or a group of people do, they can do a lot of damage to the stock and benefit on the negative side of the result instead of the positive side.
How can junior companies combat the shorters?
It's impossible right now. There's no way to combat the shorters. It's a factor of who has the money. There's nothing we can do if there's no uptick rule, if there's no rule in place that can stop people from shorting. The only thing you could possibly do is potentially pull all the company stock out of the system, which means, at one point, shorting is about borrowing stock that's in the system. If there's no stock in the system to borrow, it's more difficult to short. You can have all the money you want, but if there's a short, if you can't borrow the stock, you have to be bought in. So the only way that we can really combat it is encourage all our shareholders to pull their stock out of the system and put it in a safety deposit box. That's the only way to combat that. Otherwise, we're at the big money will dictate where the stock goes, and that's difficult. And it's actually, in my opinion, it's just a form of manipulation on the downside. I don't understand how they could let groups of people come in and manipulate a stock down, because that's kind of what it is. So I think they've made a tactical error. I'm not sure why they've done it, but it's been very difficult for a lot of junior companies to, in particular, fund. Funding's really being hurt, and the price of the funding's being really hurt by shorting groups or the money out there that chooses to be on the short side.
The Canadian junior stocks now trade on multiple platforms. Could the uptick rule be reinstated separately on each platform?
I think it could. It's if IROC is putting it in place, it certainly could. Everyone has to abide by the same rules. It would be, those gray exchanges are a bit different because there's lots of odd things that happen within them, which is if you put a bid in, you're buying some stock on the offer and you get a part fill, you'd think you'd be the lead bid at that point, but in many cases now, you're not. So these nanosecond trading systems, I'm not sure if they're good. They certainly increase volume. I think they're probably based on commissions being cheaper, and I understand that, but it's the formats needs to be looked at very carefully again, because it doesn't appear to be the standard. Who initiates the bid is the one who buys the stock on the offer, and that doesn't happen. It's a very strange system at the moment. So I think you could do it. Whatever rule, all exchanges need to abide by the same rules, and that could be done, but there's some complications.
The German stock market has banned short trading because they said the idea of a stock market is to raise money for companies and not take it away from them. Do you think there should be a ban on shorting?
Well, I don't think there should be a ban on shorting. I think there should be a logic behind it. I don't think if it's an overwhelming tool to destroy companies, I think it's a very poor idea to have shorting in place. But with an uptick rule, I think that's fair market. There should be equal pressure on the upside and the downside in any given real market, but as long as they don't have an unfair advantage, which is if you take away that uptick rule, all it is a question of how much money do you have. And there's groups out there that have a lot of money that I don't mind anyone making money, but I don't like to see good ideas destroyed based on that. So I would think the shorting should still be out there, but in a format like with an uptick rule, where you have to wait till there's volume and upside to get short, rather than just hitting the bid and hitting the bid and hitting the bid and hitting the bid because you have the money that makes it possible.
Why do you think regulators are reluctant to reinstate the uptick rule?
Well, it's a good question. My personal theory is the banks are involved. Banks are a big part of who IROC is. The members control IROC, but the banks have a very big say in that. I think the banks think the venture exchange is it's liability. They pretty well state that they don't want their brokers recommending small venture stocks. They don't mind if you go through their discount brokerage system, because there's no one's telling you to buy these smaller stocks. It's just you get on the computer and you execute the trade yourself. So there's no liability. But I think banks don't like the liability of the smaller markets. They're a little bit riskier for their companies to deal with. So that's why I think there's a bit of a push to move away from the smaller venture exchange and into the higher price TSX senior boards that have a little bit more basis, and they're followed by more analysts that the banks, they're part of the bank system. I think there's a liability problem is the bottom line.
How important are smaller exchanges like the venture exchange when it comes to encouraging the exploration that keeps the Canadian mining business in business?
Well, the Canadian mining business is based off the junior business. I mean, everything started out as exploration. Some projects go through to be in the mine state. Most don't. But they all started in exploration, and a lot of that came out of our smaller markets, our venture markets, the old VSC, the present TSX. It's a huge thing, and it's also fantastic for our economy. We take a lot of exploration. It happens in remote areas that have smaller communities that are totally supported by programs coming in, and it's just got a great benefit to this country, and it always has. And no one's actually sure why they're trying to destroy it, but there's been some efforts in rules and regulations, mostly out of IROC and the securities commissions, that hurt specifically the venture exchange. And just for that example, the Uptick rule, that was designed for a smaller market. It was taken away, and we're competing now on a level that it's very difficult to compete with the bigger companies. I mean, your question was good. How does a small company defend themselves against shorters? And the answer is you really can't. So there's going to be harm. The business is going to suffer, and less exploration will be done, less discoveries will be done, less tax bases will be hurt because we employ the contractors we employ for programs. And then the ones that go to mine state is a big deal. It's a huge tax base. It's a long-term tax base. All that's hurt. So there's implications here, but there's not a lot of ears. It's difficult because the mining business comes under scrutiny, and environmental situations occur, and it's difficult to defend yourself in the mining industry. So it's been tough, and it still is tough, and I'm sure it's going to be tough in the future. But we're still here, and we're a robust group of people who explore Canada and afar, and we will continue to do so. But it'd be nice if the regulators would recognize the contribution we've made over a very long period of time and try to help us, not hurt us.
Do you have a message for the regulators and the politicians who, I guess, eventually regulate the regulators?
Yeah, I know getting elected is about getting votes, but there's a lot of people in our industry, and it will be counterproductive for politicians. It starts at politicians and goes down to the regulators, but someone needs to stand up for an industry that's really done well for this province and this country over a very long period of time. And it's being dismantled slowly, and it is being dismantled, and that's unfortunate. So, as much as we can do, we have to get out there and change people's minds and change politicians' minds. And I guess the biggest thing you can do with politicians is try to rally. We'll take votes away from you if you don't listen to us, and we'll give you votes if you do. So that's probably the most effective way of getting something done is by either getting behind them or getting against them, based on what how they deal with our industry. All we want to be dealt with is fairly. It's just like anybody else. Just deal with us fairly, and our work is documented over decades and decades and decades, and our contributions are documented as well. So it would be this that little ear.
Pat, can you tell us a bit about your company, Arctic Star?
Sure. Arctic Star was listed back in 2002. It's primarily been a diamond company for the last until current stages. We are involved in a niobium project in eastern BC, which has some really interesting potential, and we're going to be drawing that in less than 2 months. But mostly we're involved in diamonds. We have a project up in Lac de Gras, right beside the two big mines, Akati and Diavik, that we're going to be exploring this summer. It's a geophysical program based on going back to kimberlites that were previously discovered by, I believe it was De Beers in the 1990s, and just doing new geophysical techniques around the pipes to find extensions and possibly twinning of pipes and whatnot. That's one thing we're doing, and we have another property up in Nunavut, which we'll be hopefully drilling this summer too. It will be a new field if we do have a discovery there, but it's got good geochem. We've done a lot of geophysics on it, and it looks positive. So that's what we're up to, and I think we have a very positive future. I think the market's turning for the juniors, and that's a good thing for everybody.
Pat, thanks for being on This Week in Money.
No problem, Jim. Thank you.
My guest has been Pat Power. He's the president and CEO of Arctic Star Exploration. Online, you can find them at arcticstar.ca.
Comments made on This Week in Money are an expression of opinion only and should not be construed in any manner whatsoever as recommendations to buy or sell any financial instrument at any time. Archived online at talkdigitalnetwork.com. This Week in Money is a production of Howe Street Media Incorporated. Executive producer is Tom Allen.